Elon Musk has reinforced that Tesla plans to scale the Cybercab by 2026, which means production has to begin this year. I tend to be a firm believer in this because, as we all know, Elon has a track record of achieving what many thought was impossible. Those of us who closely follow Tesla are confident that he will do amazing things, especially when it comes to integrating AI into various sectors, including government. A significant aspect of this will be driving productivity improvements, which is crucial for reducing inflation. Jeff Bezos, for example, may not be following technology as closely as we are, and I think he's going to be very surprised by what's coming. As inflation starts to decrease, it's likely due to the productivity gains that we are seeing, especially from technologies like AI. When productivity rises, companies have several options. They can lower prices, improve margins, invest more in R&D, or even increase wages as output per man-hour increases. AI, in particular, is deflationary and productivity-enhancing. It allows companies to reduce costs and potentially pass on savings to consumers, driving deflationary forces that will reshape industries. We're excited about what's ahead, and we believe that the rising efficiency will play a huge role in how the economy shifts. Regarding interest rates, short-term rates might be just right given the acceleration in growth we expect in the next year. However, long-term rates seem to have overestimated the risks related to the deficit. They also fail to account for the disinflationary effects of increased productivity from AI. Recently, we've seen a shift in the type of analysts covering Tesla. Historically, the coverage was dominated by auto analysts, but now we're seeing more technology analysts getting involved. These are the right experts to understand what Tesla is doing: robotics analysts, AI experts, and energy storage specialists. Traditional auto analysts, who are more familiar with the internal combustion engine, are now faced with the reality that electric and autonomous vehicles are fundamentally different from what they've been following for years. For some of these analysts, it's been a humbling experience as they realize they were wrong about the future of Tesla. At the moment, Tesla's stock has seen a bit of fluctuation, initially down 5% after the report, but now it's up over 4%. Regardless of the short-term movements, we believe that the scaling of the Cybercab by 2026 is a game changer, and production must start soon to meet this ambitious timeline. When we look at Tesla's long-term potential, it's not just about observing from the sidelines. For those of us with a keen eye for innovation, Seeking Alpha is a one-stop source for the latest news on Tesla, stock price targets, and everything related to Elon Musk's ventures. By clicking on the affiliate links in the description, you can get updated and help support the channel at the same time. Looking ahead, our big ideas for Tesla include projections that show the company could lower car prices to as low as $115,000 in the next few years. This forecast, based on a 5-year outlook, is far from what traditional auto analysts have expected. Their view is that prices will continue to rise due to increasing regulations. But Tesla's innovation, driven by new technologies, is defying that narrative. We've also released a model for Tesla's autonomous future, and while some analysts may not agree with every assumption, we're confident in our projections. Our model allows for up to 40 variables to be adjusted, showing how flexible and dynamic our price target of $2,600 could be depending on different factors. We believe that more analysts, especially those focused on technology, are beginning to see the massive potential in Tesla, and they're starting to gain more traction. CNBC and other broadcasters are increasingly inviting these tech analysts to speak, which helps the market recognize the value in Tesla's forward-thinking approach. This is raising awareness and efficiency around Tesla's stock price, and our conviction in Tesla's AI-driven future is growing stronger. Tesla is arguably the largest AI project on the planet and is positioned at the forefront of a wave of technological transformation. One of the most striking developments is the rapid decrease in AI training and inference costs. AI training costs have dropped 75% per year, and inference costs have decreased by an even more remarkable 85 to 90%. This dramatic reduction in costs will enable breakthroughs in AI much faster than anticipated, and Tesla is well-positioned to capitalize on this trend. When discussing the competition in the AI chip market, companies like Nvidia are pushing the boundaries. However, the market for inference chips, which Tesla relies on, is becoming increasingly competitive. There's a drive to commoditize these chips, and companies like Grow are working to push down the costs in this space. This is where Tesla's massive scale and technological expertise yield a significant advantage. The progress Tesla is making in AI and robotics, especially with its humanoid robots, is pushing the boundaries of what was once thought possible. In our specialized portfolio, we focus heavily on autonomous technology and robotics, with Tesla as the largest holding. We use a 6-point scoring system to evaluate companies, and the first criterion is management. A visionary leader like Elon Musk is key to driving Tesla's aggressive investments in groundbreaking technologies. This focus on innovation and long-term thinking has allowed Tesla to capitalize on massive opportunities in AI, energy storage, robotics, and autonomous vehicles. Tesla's management is incredibly focused on overcoming pain points and bottlenecks. For example, Musk has emphasized the importance of launching the autonomous taxi network this year. The aim is for full autonomy to be realized soon, which will revolutionize how we think about transportation and business models. Robotaxis, as a SaaS model, could dramatically increase Tesla's gross margins, potentially reaching upwards of 60% once scaled. More people are now seeing the potential of Tesla's humanoid robots, which continue to show remarkable improvements in dexterity and functionality. This progress, along with the growing interest in autonomous vehicles, is positioning Tesla for significant growth. In terms of competition, there's no denying that more companies are entering the EV space, particularly from China. However, Tesla's ability to drive down costs and scale its operations means that the company remains well ahead of the pack. Even if there are challenges from international competitors, Tesla's innovation will allow it to remain profitable and competitive without the need for EV tax credits. Looking at the broader regulatory landscape, Elon Musk's push to make government processes more efficient is a key part of his strategy. He understands that AI and technology convergence are driving massive changes, and by cutting through regulatory red tape, he can accelerate progress and innovation. The administration's stance on business-friendly policies is expected to benefit companies like Tesla, which continue to push the envelope on technology. As we look at Tesla's future, particularly in the autonomous vehicle sector, we believe the stock could reach a price target of $2,600 in the next 5 years. The breakthroughs in AI, coupled with Tesla's leadership in autonomous vehicles, position it to dominate the market. The first company to launch a fully operational autonomous taxi network will likely capture the lion's share of the market, and Tesla is poised to be that leader. Full autonomy is almost here. Anyone who has experienced Tesla's full self-driving, FSD, knows that with every update, the system is improving exponentially. We're nearing the point where autonomous driving will be a reality. And when it does, Tesla will be at the forefront of this revolution. Elon Musk's visionary leadership, combined with Tesla's technological advancements, sets the company up for unprecedented growth. As the autonomous taxi network evolves and AI continues to enhance productivity, Tesla's trajectory remains overwhelmingly positive, and the stock is on track for substantial gains in the coming years.